Oil prices are up this year, inventory and production have declined, and the Russia-Ukraine crisis could cause prices to spike. Some analysts are now predicting $100 a barrel this year, but my next guest says U.S. production is poised to bounce back. Joining me now, IHS Markit Vice Chairman and author of The New Map, Energy, Climate, and the Clash of Nations, Daniel Yergin. Dan, thanks so much for coming on the show. We appreciate it.
Sure, thank you.
So you've heard all these predictions of $100 a barrel oil. Do you think that's likely, or will drillers just ramp up supply before we get there?
I've always been reluctant to get into the $100 a barrel camp, but I think with this crisis now, and it's really a crisis with Russia, not Ukraine, which means you have a crisis between two of the world's three biggest oil producers, U.S. and Russia. And I think it is possible if Russia invades that you'll see prices spike. There'll be panic in the market and disruption.
Yeah, the geopolitics is never good for oil prices. Let's pull back, though, a little bit. If you think about 2008, 2014, prices were actually higher than they were now. Could we get back up to even those levels in a geopolitical crisis? And if so, would it tamp down demand in order to bring prices down, or would it just send inflation even higher?
Well, Russia exports 5 million barrels a day, and if a couple of million barrels a day get taken out of the market, that would really have a very severe impact because it's already a really tight oil market. Even if you didn't have this crisis going on, we would have higher prices than many had anticipated. You made the point, of course, what's very important. One positive is the growth, really the return of U.S. shale production, which despite all the benedictions that were set over it, is showing some growth and is one of the few stabilizers in the current oil market.
So let's pivot to natural gas, because you've been talking about Russia. So if the U.S. is trying to get suppliers to liquefy natural gas, supply it to Europe so that Russia has less leverage, is there really enough liquefied natural gas to actually do that?
There's not much. If you are a U.S. producer, you've already probably gone up to your maximum in terms of producing because of the prices. You're going to get some gas that's released from Asia now because it's a more mild winter there. And we saw in January and in December high volumes of LNG, including U.S. LNG going to Europe. But Russia has at the same time already been cutting back. Its exports to Europe are down 50% from what they were a few months ago. So it's very tight. Europeans are right to be very concerned, and the U.S. is scrambling. And what's happened is that the U.S. government has suddenly discovered that shale production in the United States is not only an economic value, but is actually pretty important geopolitically.
Yeah, that certainly is true. Let's look farther out in the energy landscape. Can you see at this point a time at which alternative fuels become a large enough share that the demand for fossil fuels actually starts to come down? I mean, how many electric vehicles or what share of electric vehicles do we need so that oil prices suddenly start to shrink because there's less demand?
We certainly see new sales of EVs strong in Europe and, of course, in China, very strong government support and, of course, strong government support here. But I think you have to look. We have a 1.4 billion car auto fleet around the world. So I think, at least the numbers I came to in the new map, is it's around 2030 when you start to see world oil demand begin to slope down. Because even while you have EVs in the developed world, you have growth coming from the developing world where most of the world's people actually live.
Yeah, at least they produce some oil there.
Yes.
One more question for you on a different topic, because IHS Markit just put out a big report on supply chain disruption. And to be honest, it wasn't terribly optimistic. Give us the 1 minute rundown on that, and is that going to be inflationary?
Well, we certainly see the supply chain disruptions of one kind or another continuing into 2022. And it's not one supply chain disruption, it's a number of them. And it involves everything. Look at the shelves in stores right now. So eventually it will get solved, but it's going to continue. And there's no question that this is a major source of inflation. Just as you see these prices going up of food and everything else. So this is not going to be a sprint, as some said, but it's a marathon to get it solved. And it's a problem that's across the whole economy.
Yeah, if we have more demand than we have containers coming into the ports, prices are going to go nowhere but up. Daniel Yergin, thank you so much for coming on.
Sure. Thank you.